This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In our first lecture on Chapter 6, we saw how it was that we'd attempt to relate any tax-adjusted trading profit accounting period to a tax year of assessment. Now, the normal basis of assessment is CYB. That should be held to handle very easily. We know that for any given tax year, an ongoing business, we assess the tax-adjusted trading profit of the accounting year ended in that, the current tax year. But in opening years in particular, we have a problem. Now, the way that we resolve that problem is to follow the rules as laid down by HMRC. Not up to us to decide which 12 months of profit will be assessed in any tax year. The rules are cast in stone. We must simply follow them. Whether we like them, whether we understand them or not, no matter, we learn them. What we saw was that in the first tax year of trading, we will always use an actual basis of assessment. So what does that mean? It means, as regards an actual basis, that we will take the profits made from the date you started trading through to the following 5th of April, i.e. at the end of that first tax year. And just about inevitably, it means we're going to have to do some time apportionment of the profits of an accounting period. Having got the first year sorted, we will use CYB as soon as it is available. But that may not be in the second tax year, may not even be in the third tax year, as we'll see in this lecture. It may be as late as the fourth tax year before it happens. But as soon as we got it, we will use it. So what do we do in the most difficult of the tax years, the second tax year? Remember, we ask a question. That question to begin with is, do we have any accounting period at all? Any accounting period ended in that second tax year? Now, the answer to that question is, as it was in our first lecture, yes, we do have an accounting period. Then the only other question was, how long is it? And that was, is it less than 12 months? Is it more than 12 months? Do we have a short period ended? Do we have a long period ended? Now, if you remind yourself and go back to that example in our first session on this chapter, we had a short period, a 9-month period. We started to trade on the 1st of January 17 and prepared accounts to the following 30th of September 17. So in the second tax year, we had a 9-month period. If a short period ended in that second tax year, what do? We took, therefore, the profits of the first 12 months of trading. What did that involve? It involved taking all of the profits of the short opening period and adding to it as many months as required from the second profit-making period, the 12-month period there that you'd have had, that second period. Take as many months from that as we needed to add to the opening short period to make it up to 12. We used the profits of the first 12 months of trading. What we're now going to see is the remaining two circumstances that could arise. That when we get to that second tax year and we pose that question, do we have any accounting period ended in that tax year? Well, again, the answer is, yeah, we do. But this time the answer is, it's a long period. The other outcome that we need to look at is when we ask that question, do we have any accounting period ended in the second tax year? But the answer is no. And we have an entirely different and new basis then to apply. Okay, let's therefore look at what happens where, as we have now looking at your notes in front of you here, if we have the situation that how long is the accounting period that ends? It's more than 12 months long. We assess the profits for the 12 months to the accounting period end date ended in that second tax year. So we've got a long opening period, more than 12 months. So back in the first lesson where we had a short period ended, in the second tax year, we took the profits of the first 12 months of trading. What we're now going to do when we have a long opening period that ends in that second tax year, one of more than 12 months, we will take the last 12 months of that period, the 12 months to, as this note said, to the accounting period end date ending in that year. So let's see, therefore, by the use of a little example, how that will pan out. So here's our example that I've set up for you already, if you want to make a note of that information. Taxpayer commences trading on the 1st of January 17, again, and prepares accounts to the 31st of March. But rather than preparing accounts to the next 31st of March, that would be the 31st of March 17, that would only be 3 months into the opening period. Well, when a taxpayer starts to trade, they don't, after 3 months, while they start preparing accounts and dealing with all of that administration. They've got a business to run. So what's happened here is that the trader has decided to trade through, all the way through to the following 31st of March. So we have an opening period to the 31st of March 18 that started on the 1st of January 17. Now that, of course, means that we start trading with an opening 15-month period. Right, let's go back to the first tax year, back to our start, and see how to determine the assessment in each year and how, for purposes of a Section C question, we will present the information here. Right, first tax year, well, we'll remember this from our first example, but the start date, 1st of January 17, what tax year does the 1st of Jan 17 fall in? It is obviously 2016-17. What is the basis of assessment? As it always is in our first tax year, it's an actual basis that we use. What do we mean by actual? We mean the profits from the start date, 1st of Jan 17, through to the following 5th of April. That, of course, is the 5th of April 17 there. How many months is it? It is 3 months. But this time, it's drawn from what was a long opening period of 15 months, in which we made a profit of 45,000. 3/15 of 45,000 will therefore be £9,000. 3/15 of 45, methinks, is £9,000. So, tax year 16-17, basis of assessment actual, basis period start date to following 5th of April. That is 3 months out of what is a longer opening period of 15 months in which we made 45,000, and there's your assessment there. One thing also to note, hopefully we don't have a problem determining which tax year is the first tax year, but maybe a thing to do is, having noted that first tax year here correctly, 16-17, and you then go start date to following 5th of April, just check that 5th of April 17, is that the end of the 16-17 year? Yes, it is, so we know that we are correct. If we'd taken an incorrect view of the information in the question, we hadn't focused, we'd gone, so when did we start? Oh, we started in 2017. So 17-18 will be the first tax year. You'd have written 17-18, that would be 18 there instead of 17. This would still say 5th of April 17, the following 5th of April. And then if you think, hang on a minute, something's wrong here, and you could put that right and get the correct answer. So a little check there to make sure that you've got that first tax year correctly determined. The reason being that if you get the first tax year wrong, everything from that point is going to be wrong. So it's worthwhile just checking to make sure you got it right. So first tax year sorted, it's an actual basis of assessment here. So what do we then do in our second tax year? So that now must be 2017-18. And we need a basis of assessment. So we ask the question, in 17-18, do we have any accounting period that ends in that tax year? And the answer is yes, we do. We have a period to the 31st of March 18 that ends in that year. That was that opening accounting period there to the 31st of March 18. Well, that only just, but does end in the 17-18 tax year. So that period that ends in that second tax year is a 15-month period. We've got a long opening period ending in the second tax year. So what do? We take the 12 months. We take the 12 months to the accounting date, 31st of March, ended in that tax year 18. It is therefore the last 12 months of that long opening period. So again, remember, if you start with a short period that ends in the second tax year, take the first 12 months, short period ended in second year equals first 12 months, long period, no, pardon me, ended in that second tax year. If it's a long period, then we take the last 12 months of that long opening period. The 12 months to the accounting date ended in that tax year. So what period will that be? Well, it's to 31st of March 18, so that would have begun on the 1st of April 17 there. Now that, of course, is 12 months taken from the opening 15-month period in which we made, as we know, £45,000. 12/15ths of 45 will be £36,000. And the assessment is sorted. Having dealt with the second and always the hardest of the years, the second tax year, what we can now do is to move on, of course, to our third tax year, where we're hopeful in what will now be 2018-19 of using CYB. To use CYB, we would need an accounting year. Our year-end date is 31st of March, ended in that tax year. Which 31st of March ends in the 18-19 tax year? 31st of March 19. Do we have a year ended 31st of March 19? Indeed we did. So yes, we can and will now use our CYB basis. So 2018-19 current year basis is available. It's the accounting year ended the 31st of March 19. What was that profit? It equaled £60,000, and we're off and running on CYB. And as we said, we'll now stay on current year basis until we reach the final tax year of assessment. Okay. The other problem we had to think about when dealing with opening years is the issue about overlap profits. So I'd like you to have a little look here to determine whether or not we have any overlap periods and therefore any overlap profits to identify and to compute, and note in reference to using them then as a deduction in the final tax year of assessment. So take a moment there just to look through and to tell me what, if any, is our, pardon me, what, if any, is the overlap profit that has arisen. Now, hopefully what you've seen in relation to the profits that we've got here is, in fact, if you choose the 31st of March, there will be no overlaps that arise. In 16/17, you've used the first 3 months of the opening 15-month period there, the first 3 months. In the second tax year, 17/18, we've used the last 12 months of that 15-month period. So first 3, last 12 of the 15-month period, no overlap there. And then, of course, we've moved on to 18/19, where we've got a totally unique basis of the year ended 31st of March 19. So, if you choose the 31st of March as your accounting date, the outcome of that is that, in fact, there will be no overlaps. Now, you might think that's a good thing, it's a bad thing. It is a matter of fact. But certainly what is true is to say that if you choose 31st of March, the fact that there's no overlap profit means that over time, any overlap profit would devalue just by the effects of inflation. If I start a new business now, I have an overlap profit, but I run that business for 20 years. What I get to credit back at that final tax year 20 years from now, in that final tax year, is going to be an overlap profit that arose at this point in time. And there'll be no relief for the effects of inflation, it's just the figure as it was. So at least if there's no overlap, you're not going to lose out in terms of the time value of money, the effect of inflation. There'll be no overlap profit to go down in value, as it were. Whether that means that's a good argument to choose the 31st of March as accounting date is another matter, and one that we'll return to later in this particular chapter. But for the moment, what we see is if the answer to the question, do you have an accounting period ended in that tax year? If the answer is yes, and the outcome is either a short period or a long period, obviously if it was exactly 12 months a year end, you'd have CYB anyway, but if either a short period or a long period ended, you know how to deal with it. Short period ended, take the first 12 months. Long period ended, take the last 12 months of that long opening period of trading. That leaves us, therefore, with one other possibility. If we go back to our notes here, and on these notes we saw, is there an accounting period which ends in that second tax year? Well, the answer is rare, but it could be no. And if that answer is no, what do we do then? Very simple. We use an actual basis. We assess the actual profits in the tax year, the second tax year, i.e. 6th of April through to the following 5th of April there. We use an actual basis of assessment. Now that sorts out the second tax year. So first tax year, actual, second tax year, actual, you'll then come to the third year. Up until now, at least in the third year, you've been able to use a current year basis. What will now happen is in that third year, we assess the profits for the 12 months to the accounting period end date ending in year 3. Up until now, the accounting period has been an accounting year. So the 12 months is a full year end, and therefore it's CYB. What you'll now discover in this circumstance is, just like what happened in the previous example a moment ago, that in the second tax year you had a long opening period that ended in that year. Now you'll have a long opening period that ends not in the second, but in the third year. And we'll do exactly the same as we did then, assess the profits for the 12 months to the accounting period end date, ending in that year, this time year 3. So what would have happened in the second year is now happening here in the third year. It means, as we made mention of earlier, that we're going to have to wait all the way through to the fourth tax year before we are able to use current year basis. Okay, let's see how that plays out therefore with a little example. Now, in terms of the example that we had here, what we did, as we have done all the way through the examples so far, we started trading on the 1st of January and prepared accounts to not the next 31st of March, but the following 31st of March, a 15-month period through to March 18. What we're going to do now is to have exactly the same start date, the 1st of January 17, but this time, instead of going 15 months through to the 31st of March 18, we're going to go on for one more month and make it the 16 months to what will therefore be the 30th of April 18. And we'll see what outcome then arises. Okay, let's therefore set that example up in line with what I've just said. So now therefore, taxpayer commences trading, starts to trade on again the 1st of January 17 and prepares accounts to the 30th of April. But having started on the 1st of January, rather than just going for 4 months to the 30th of April 17, our opening period will be the period all the way through to the 30th of April 18. And in that period, our taxpayer makes a profit of £48,000. Now, if you look back at the previous example where we had a 15-month period, what we saw was that the adjusted profit that we used was £45,000. 15 months, £45,000, if you haven't already worked it out, that was £3,000 a month that gave rise to the assessments there that we've used that basis period for. So it's £3,000. All I've done now is, in choosing the 30th of April, I've gone one more month, so that is a 16-month period. and I've just added another 3,000. So I've got the same average profit per month made. Now you'll see why I'm doing that in a moment's time, because what we're going to be able to do is then compare and contrast what would have happened if we had chosen 31st of March. We've already worked out the assessments, with what now will happen with the self-same profits arising if we'd chosen 30th of April. And then we've got the more interesting issue of deciding. So looking at what assessments have arisen, looking at the situation that has arisen, which would you choose, 31st of March or 30th of April? But before it comes to that choice, let's work out now using our relevant bases of assessment for the tax years concerned, what assessments will arise in each of the tax years. Now, what I want you to do here is to handle this to begin with. You should be able to recognise start date, so what again is our first tax year, work out the assessment in the first tax year, and hopefully work out the assessment in the second tax year as well, given the situation that you see arises. So I suggest at this particular point you stall this, just pause this for a moment, and you work out those assessments in the first 2 years. If you can go on and complete the exercise, fantastic, but I'll then take you through that in a few moments' time. So pause therefore at this point, work out the assessments in the first 2 years, and then rejoin us. Okay, hopefully therefore, when we see that we've got that opening period to the 30th of April 18, we started on the 1st of January 17, what will we now do in terms of our opening years? Start date falls in the 2016-17 tax year. Basis of assessment, as it always is, must be sick and tired of writing this out now, actual. Basis period, it hasn't changed, 1st of January 17 to the 5th of April 17 there. That hasn't changed, that is still 3 months. And therefore, we will take 3 months out of what is now a 16-month period, 3/16 of 48,000, and that will be £9,000. Again, we kept that average profit level at £3,000 a month, so it's £9,000. On to the second tax year now. That second tax year, obviously, here being 2017-18. Question, do we have any accounting period that ends in that second tax year? Well, the opening accounting period went all the way through to the 30th of April 18. The 2017-18 tax year ends on the 5th of April. So the answer to, do we have an accounting period ended in that second tax year, is no, we don't. And if there is no accounting period ended, then we use actual basis of assessment. What is actual? The start of the tax year, 6th of April 17, through to the end of the tax year, the 5th of April 18. Now that, of course, is 12 months, and it will be 12 months, again taken from the opening 16 months period, therefore the opening 16-month period in which we traded. 12/16 of 48,000 will give you £36,000 as your assessment. Again, on an average basis of £3,000 a month. Right, so there we've got actual. We then said, well, could you go further? Remember here, I've only given you the tax-adjusted trading profit for that opening accounting period, the period to the 30th of April 18. What I'll now do is to add in the further information about the next period, which will be the year ended 30th of April 19. And just like in the previous example, we'll go with, for that second period, a £60,000 tax-adjusted trading profit. So it's the same business, and we're showing alternate outcomes in terms of tax-adjusted trading profits if we had prepared accounts to either the 15-month period to March, or now the 16-month period to the 30th of April of 2018. So Going back, therefore, to our what will now be our third tax year, that will be 2018-19. We again ask the question, do we have an accounting period ended? And this time, thankfully, yeah, we do. We do have an accounting period ended in the 18-19 tax year. It is, of course, a long period. It's a 16-month period. And where you have a long period ended in that third tax year here, you take the last 12 months, the 12 months to the accounting date, 30th of April there, that ends in that tax year, the 12 months to the 30th of April 18. And look again now at what is happening. Yet again, you are using the opening period through to the 30th of April 18 as the basis period by which to determine your assessment. So, in relation to that, what would the basis period be? Obviously, it's 12 months to 30th of April 18, so that would have begun on the 1st of May 17. What calculation will that be? Yet again, we're taking 12 months out of what is an opening 16-month period in which we made the profit of £48,000. So yet again, we are looking at a £36,000 assessment. 12 months to the normal accounting date, ended in that tax year, 18-19, 12/16 of 48 is £36,000. So we've used that opening period of profit, that 16 months to 30th of April 18, to work out the assessments not just in the first and the second tax years, but also in the third tax year rather. That would imply, and I need you now to go and calculate what the overlap profit will be. Again, in our previous example, we saw that if you chose 31st of March as your accounting date, there would be no overlap profit. If you choose 30th of April, there's going to be a lot of overlap profit. I'd like you, therefore, to take a moment now, again, pause at this particular point in time, take a moment to check out and work out for me what you think that overlap profit will be. You know what then happens to it. It's then retained until such time as the business ceases to trade, where it would then be deducted in deriving the assessment for whatever the final tax year may be. But you work out what that overlap profit would be now, please. Okay, hopefully now you've worked that and you've rejoined us. What do we see? In the first two tax years, we have used an actual basis of assessment. That means, therefore, that those are two unique basis periods. There is, again, no overlap between the first and the second tax year. But when we come to the second and the third tax year now, the second and the third tax year, look at what has happened here. In 1718, our basis period went as far as the 5th of April 18. That has only moved forward, again, we'll just apportion to the nearest month, one more month to the 30th of April 18, to include now April in the apportionments. So that means, in terms of overlaps, we've got an overlap period between 1718 and 1819 of some 11 months. We've got an 11-month overlap period there arising. Now that means that our overlap profit, may be computed as, and of course hopefully you've already established this figure, overlap profits, that's going to be 11 months out of the 16 months in which we made 48,000, and that will be £33,000 there. £33,000 of overlap profit. Again, you've got the other way of always computing overlap profits. What profits arose in the actual profit periods? What tax years have you used them in? Compare the two totals, and the difference is your overlap profit. But there, 11 months of overlap, £33,000. We can and will go on for just one more tax year here, 2019-20, when at last now We got to what is the 4th tax year, and now at last we can use current year basis. Right, what will that be in relation to the use of CYB with an April date? Accounting year ended the 30th of April, 30th of April, which 30th of April ended in that year, the 30th of April 19. What profit did we make for that period? It was £60,000. £60,000 there. Right. Go back through, make sure that you're happy with how that each of the tax years, applying the rules that you see in your notes, tax year by tax year, we have determined what basis of assessment applies, what that means in terms of a basis period, and what then the computation of the assessment will be. Check that out. Once you've done that, what I also then want you to do is to answer the more interesting question, the planning question. And that is if prior to or just after the business had started to trade, the client, the taxpayer, had asked you which accounting date to choose, given that you had a choice between the 31st of March or the 30th of April. Remember, we worked out the assessments for both of those dates. What recommendation would you make and why? So I want you between, well, now and our next session together on this chapter to come up with an answer to that problem. Which date would you recommend? Would you choose 31st of March or would you choose the 30th of April? And of course, why? What's the reasoning behind your choice of accounting date? So there's a bit of a planning problem for you to have a go at. Enjoy, and I look forward to seeing you next time around.